Did SCHD's latest dividend payout meet expectations? Stick around as I break down the numbers, reveal the portfolio's new balance, and explain what it means for dividend investors like you. Welcome back to Simply Money. For those who have been following the channel, we do updates periodically on SCHD, and there was just a new dividend distribution. They announced what the new distribution will be, the amount, and we're going to look at the portfolio with this updated amount and look at some new data on annual dividend and annual dividend growth along with yield on cost, how this has grown in our scenario here. Opening up the chart, you can see as we started out back in March 1st, 2017, buying $50,000 of SCHD. All of this now has been updated with the recent stock splits. All these figures have been done with that in mind. The dividend is 1/3 the amount it used to be because you have 3 times as many stocks. Everything's equal, but it's showing the updated data based on the stock split. For those that don't understand how the stock split works, is if you had 100 stocks and they were valued at $30, now you have 300 stocks that are each valued at $10. It means that you got 3 stocks for every one you own, but the cost, the amount, the value of the stock was divided by 1/3. The reason they do this is to entice people who maybe can't buy fractional shares on their platform, or to get new buyers encouraged to buy in because the price looks lower. It's nothing new. It happens all the time. This is reflecting of that stock split. $50,000 invested. At the time, the cost was $15.02. That gave us 3,328 shares of SCHD, and that's our $50,000. We're going to go down here to the end of 2017, just kind of see how things began as a recap for those who haven't watched this before. If you want to see some other videos we've done, we just did one on JIPQ, an update with that. But here in 2017, let's just summarize real quick. The dividends were being paid on a quarterly basis, 11 cents. Each quarter it was 11 cents. So the dividend payment was $366 on the first payment because you had 3,353 shares, and you were now buying 24 new shares with this dividend payment. So each time you get a dividend payment, you buy more shares. We show the stock price at the time, how many shares you were able to get with the dividend, and what your new share quantity is. And we're also showing the value of the shares as they grow. At the end of 2017, the last payment was $391. You were at a stock price of $17.05. We were able to get just under 23 shares. And so you ended the year at 3,425 shares compared to the 3,328, up almost 100 shares in that first year. And your value, the growth has gone up to $58,000. By reinvesting this amount, these dividends, and the share price increase of $2.03 per share, you've increased your value of the portfolio by $8,000. The annual dividend, when you add up the quarterly dividends, the annual dividend for that year was 45 cents. I know that's 44 cents when you look here, but we're not showing the fractions of a pennies, which actually brings it to 45 cents for those who are paying attention. And your annual dividend payment was $1,513. On a $50,000 investment, you grew $8,000 in value and you received $1,500 in payments. Your yield on cost, the yield of the payment, the dividend yield, was 3.03%. So just at 3% yield for that first year. And that's something I want you to pay attention to, is both the annual dividend growth, which we don't have any here because this was the first year we're tracking this, and the yield on cost. I want you to see how powerful SCHD is on both of these fronts and why this is important. Scrolling down here to the end of 2018, you can see the dividends have actually dropped the first quarter. And this is what gets people a little spooked sometimes. They'll see a drop like that and think, oh, this is horrible, reducing their dividend amount. And so they get freaked out. Maybe they pull out and they sell. People do that with share prices, and they do that with dividend. But dividends paid quarterly, sometimes they'll have some quarters that are lower and other quarters that are higher, depending on the companies that are within that ETF and when they're reporting their earnings and how they do. So sometimes like the second and the fourth quarter may be the bigger dividend payments in certain ETFs. Other ETFs, it might be the first and the third. So you just have to be aware of that and understand it's year over year that you're looking at for that CAGR, that compound annual growth rate. How much is the dividend growing year over year? And as we look at this, you can see the first quarter was 9 cents, but then it went up to 14, 12, and 14 cents. If you skip over here, it was 48 cents. It was a 3-cent increase from the prior year, which is a 6.7% CAGR. Means the dividend grew by 6.72%. And that's an important element when you're looking for dividend-paying ETFs. You want ones that are growing their dividend. You don't want one that just has the same amount because it's not going to keep up with inflation and other aspects of your income that you're trying to derive. But income growth is an important element to look at. Again, looking at each of these quarters, how much dividend you got paid is right here, and you repurchased at this share price. You were able to accumulate these shares. And so now at the end of 2018, you're up to 3,524 shares. So you've gained, again, now you're up 200 shares compared to when you first began investing 2 years ago. And here's something, again, to pay attention to. The share price had peaked up here the quarter prior at 61,000, but it dropped to 56,000. Again, this is a 2-year look. You're up almost $7,000, but people see this drop. That's when they panic, they get nervous, they start selling instead of realizing that this is a buy and hold long term. And we're going to see why if you had sold just because you got a little spooked here, thinking maybe you might start losing money, you're going to lose out. And remember, you didn't lose money. Even here, you're up $7,000. Even though it's down from the prior quarter, you're still up on your investment. That's where a lot of people make the error of saying, oh, I lost money in the stock market. No, you did not, because you did not sell it. You don't lose money until you sell it. That's when you lock in your gains or your losses. Right now, it is unrealized gains, meaning you haven't locked it in. If you sell, you lock in that loss. You don't want to sell until you're ready or if you need to. That's why you don't put money in the stock market that you're going to need anytime soon. It's for the long-term growth process. And you're going to see how powerful this growth is here shortly. Let's skip down here now. Jump down here to, we're going to go down to 2020 here. We'll do 2 years now. 2019 and 2020, you can see the dividend now is going 12, 14, it's up to 16, and then it ends at 2020. Even though COVID hit in 2020 early, they still paid out the dividend. And at the end of 2020, they went up to 18 and 20 cents per share. You can see the amount you're being paid now is doubled from what you were getting paid the first year. You're up to $750 of dividend payment that quarter. The stock price now is shot up to $21.20. The quantity that you're buying, because you're getting a higher dividend payment, now you're buying 35, 36 shares. Your cumulative quantity of shares is up to 3777. You've gained 450 shares in these 4 years. That's an amazing adding to your portfolio, not only the value, but you're adding more shares. Now look at where we're at, $80,000. If you'd got nervous back here in 2017 when it went down to 56, look what you would have missed out in the next 2 years. You can see how it went back up to 61, then to 56. It slowly crept up. And here you have right here, 69, almost 70,000 at the end of 2019. But then COVID hits, it drops down to $54,000. And a lot of people panicked. A lot of people sold. And this was such a short-lived drop in the market. And they panicked, they sold, they locked in that drop, and they missed out. Because then shortly, by the end of the year, it had gone up to $80,000 of value. Your dividend payment for the year was 68 cents, up from 57 cents in 2019, and the last time we looked at it, the 48 cents. You've gone up 20 cents per share and you've gained 450 more shares in those 2 years. Look at this annual dividend growth. The CAGR is almost 20% in 2019, and then almost 18% in 2020. That is a strong dividend growth, meaning that growing their dividend by that amount each year, that is a pay raise. In 2018, you received $1,600. In 2019, you received $2,000. That's a $400 pay raise by doing nothing. Passive income that gives you a pay raise. And then look, you're up to $24.97, another $450 pay raise the next year doing nothing, just letting your money sit, reinvesting the dividends automatically. You have to do nothing. You turn it on, hit the drip reinvest in your portfolio, boom, you're done. That $50,000 is growing, reinvesting automatically, and it's growing its dividend. And now look at your yield on cost. Remember, the first year was 3.03%, meaning the dividend that you got paid was 3%. It'd be like putting your money in a savings account and getting 3% each year. But your savings account doesn't have an annual growth. It doesn't grow year over year. So the next year it was 3.32, then 4.1. And this year, 2020, you're up to 5% yield on cost, meaning the money you invested is now making 5% return on the dividend. That's not counting the growth of your portfolio of the shares. It's simply counting the dividend growth and the dividend that's being paid to you. That is an incredible part of dividend growth that people miss, is the yield on cost. I'm going to skip down here now. We'll go down to 2022, the end of that year. Again, you can see here 2022. Okay, 2022, you can see we ended with a 20-cent dividend in 2020. And again, 2021, March, it was 17 cents. People are thinking, oh, it's dropping. But compared to the prior March, it was higher. Then it's 18, 20 cents, 21. Then again, look, March, 17 cents. Are you seeing the pattern? March is always the lowest payment. Then it goes higher in June, goes down a little bit in September, and then goes a little higher in December. End of the year, instead of 68 cents, 2021, you're up to 75 cents. In 2022, you're up to 85 cents. You have doubled your dividend amount in these 5 years. Per share, you're getting twice as much dividend that you were when you first bought. And you've been reinvesting this. Now look at your payment. This latest payment is $935. The stock price, the share price has gone up. It's fluctuated anywhere from 21 all the way up to 26. It peaked here. And at the end of the year, it set at $25 per share. Remember, 2022 was a down year for the market. SCHD was a great stabilizer for a portfolio, because where the S&P 500 may have dropped 20, 25%, SCHD only dropped 3 to 7%, somewhere in there, depending if you were reinvesting your dividends. So it's a great stabilizer. You don't see that big dip. And at the end of 2022, you're now up to 4,027 shares. You've increased the amount of shares by almost 700 shares in these 5 years. And look at that. Your portfolio balance has more than doubled. You're up to $102,000. 5 years, you've doubled your money. Has there been some turbulence? Yes, you dropped down to $56,000 back in 2018. Here in 2022, it had peaked at $103,000 and then dropped down to $90,000. Panic mode sets in, people thinking, oh, I lost my money, but you did not. You're up $40,000 from your initial investment. It's just down from what it was 2 quarters ago. This is where you have to buy and hold and stop looking at the market on day-to-day, weekly, and quarterly fluctuations. Look at 5, 10-year outcomes. That's what you're after. Now, when we look at the annual dividend, again, we're up to 85 cents. Look at this annual dividend growth. The last one we'd looked at was almost 18%. It's down a little bit. It was just under 11%, and then just under 14%. Those are still great CAGRs. Strong compound annual growth rate of the dividend. Your payment, look at this last annual dividend for the final payment for the year for 2022, For that year, you earned $3,364 in dividends. Look at your yield on cost. You've doubled your yield on cost. Again, if you'd put $50,000 in the savings account, you would still be earning the 3% interest. Now you're earning yield on cost is 6.73. That's your dividend payment. If you were at this point to say, I'm done growing my fund, I'm going to start using the income, and you turn the drip off, you're still going to get the value growth of how much the value has grown, and you're just going to start drawing out this. And so you could increase your income by $3,000 a year off that $50,000 investment that you made, and it'll keep growing year from year. Okay, let's skip down here. Let's look at our latest update. As you notice, I've changed. What happened was there was a projection of a 25-cent dividend for December 2024. But on December 11th, Schwab announced that the dividend would be 26.45 cents. I wanted to make an update versus the 25 cents that had been projected, so you have the most accurate information. This portion has been recorded a few days later, and I'm adding it in so you have the most up-to-date information going on. As you can see here on our sheet, as I've scrolled down to December 16th, our dividend on this month, or for this quarter, is 26 cents. And that gave us a dividend payment of $1,135. And today's share price is $28.74. I will update this for the next time we do this on what the price was on the 16th when this actually gets purchased and that dividend is reinvested. But I wanted to get this out again so you could see what the dividend payment is. And this gives us a really close understanding as we continue to track SCHD in this portfolio, in this analysis, and how it is growing. With that dividend being reinvested, you're able to buy almost 40 more shares, and that brings your cumulative shares up to 4,331 shares in your total value of $124,487,000. Now, the big thing I want to show you here is the annual dividend. That brings the dividend for the year up to 99 cents. And then some fractions of change. We're just rounding off to 99 cents for the year, which is an increase of 11.87% over last year's 89 cents. This is the difference between a dividend-paying fund or stock and a dividend growth fund, because the continual growth not only keeps up with inflation, it outpaces inflation, giving you passive pay raise year over year. You can see last year the CAGR was a little bit lower at 3.77, the worst since inception for this fund, but it's still been going up, and the average has been amazing. This is a great fund for growth investment. The annual dividend payment, when you add the 4 quarters up, comes to just over $4,000, so $4,199, and that brings your yield on cost to 8.4%. And that's where the dividend growth really begins to manifest itself. You may start off with a 6% yield, but if you're not getting that growth in 5, 10, 15 years, you're actually making more with the dividend growth because the yield on cost goes up higher. And the other thing is that you want your share price, your value, to continue to go up. Let's look at that as we look at the final numbers here. The cumulative dividend payments since March of 2017, you've received $21,768 in dividend payments. You're reinvesting those right now, but those would be the payments you could receive if you decided just to take it out on a regular basis. Like now, if you turn the drip off, every quarter you'd be getting a $1,135 payment, and that would go up each quarter. Your share price has grown 91.34% since we started this. You've gained 1,002 shares. Again, this is why the drip is so important, because you don't have to go and sell shares to get money when you get ready to start needing income. You can turn the drip off and you can increase your annual payment in this portfolio, in this example of a $50,000 investment. You can increase your annual income by $4,000 simply by turning the drip off and not needing to sell any shares. And you've gained 1,000 shares just in these first few years that you've been doing this. Again, your total shares at 4,331. Your value gained is $74,121. So between your dividends reinvesting and the share price growth, that $50,000 has grown an additional $74,000 just in these 7 years. And that's a total growth of 148.98%. What are your thoughts on SCHD? What do you think about this latest dividend payment? Are you bullish on SCHD going into 2025? Are you in this for the long term? We've looked at many examples on here of how some short-term downturns, some dips can create anxiety and people to jump out of the market. But when you stick with it and you have that long-term goal in mind and you don't allow ups and downs to dictate your behavior and you stay with that investment, the long-term gains and the long-term income is incredible with a ETF such as SCHD. Hit that like and subscribe button if you find these videos informative and you like them. Share it with a friend and leave me a comment. What are some thoughts you have on SCHD? And what are some funds you'd like to see an analysis similar to this on? I'd be glad to do that for you as well. So that's it for today on Simply Money, and we'll see you next time.